All right, Matt. So the next stock we're going to discuss is Brookfield Infrastructure Partners. Key thing to point out with Brookfield Infrastructure, it's more diversified than Crestwood. They also have some, in addition to having some pipeline investments, they also have some investments in data centers. They have some investments in regulated utilities. They yield about 4.8%. Their distribution has grown at 11% cumulative annual growth rate since 2009. What really stands out to you about Brookfield Infrastructure?
Well, as you mentioned, it's diversified. It does have the pipelines. They've got a pipeline through North America. They've got one in Brazil. They're buying one in India. So not only do you get the North American that you can get, in any of these MLPs, but you get the global pipelines. And then in addition to that, they're just savvy of knowing what type of infrastructure is needed elsewhere. So you mentioned the data centers. That's, they see data as being the new oil, as just being, it's exponential growth in data. So they're investing in cell phone towers, data centers, fiber networks. And then they're also big on things, transportation type businesses like ports, toll roads, and rail. So they're really a broad way to diversify into infrastructure generally. And so it's a different way to kind of play this side of the market.
Yeah, I guess the way to think about it with Brookfield Infrastructure is if you need to move something from place to place, whether it's data, oil, goods on a toll road or anything like that, I mean, that's something that they're going to pay attention to and look for opportunities in that space.
Right.
About 95% of their adjusted EBITDA comes from regulated or contracted revenue. So you're getting a pretty steady cash flow through the business. So it's a very predictable business. Let's talk about their acquisitions, because a lot of their growth, you talk about, with their cash flow being relatively steady year over year, a lot of their growth is going to come from acquisitions. And they just announced about $1.8 billion in new investments, $1.4 billion of which is going to go into energy, while the rest of that is going to go into data centers and some other opportunities. You want to talk about what they're looking at with these new investments and what opportunities Brookfield has to pursue there?
Yeah, so one of the things that Brookfield does is they'll buy a business and they'll own it for a long time. So they just sold a electric transmission business in Chile, and they're using that money to reinvest in some other higher growth opportunities. And they've got about 6 deals going right now. One of them is they're buying Enbridge, the big Canadian pipeline company. There's gathering and processing business in Western Canada. It's focused on the Motley shale, which is a natural gas liquids type of shale play up there. And, so they see that as a growth opportunity to, as Canada starts exporting natural gas, and it has really good returns up there. So they see that as a good organic growth opportunity. They also are buying a pipeline in India. India's the faster growing energy market going forward. China was the big story of the past, couple of decades, but India is going to grow very, very fast in the next couple of years. So this is their kind of inroad into India. And they also bought a residential infrastructure company. What they do is they lease things like home heating systems and water heaters, those sorts of things, to homes and businesses. So that's kind of their energy investments. And they also bought a gas utility in Colombia. So again, spread all over the world, diversified. And as you mentioned, a lot of these are contracted cash flows. So just like a pipeline company will sign a long-term contract with shippers, a lot of these are long-term contracts. So you got that stable cash flow. And then they have the data infrastructure investments. One's a deal with AT&T to buy some data centers, and another, they're partnering with a real estate investment trust to buy some data centers in Brazil. So again, you've got that diversification both in sector and then in geographically. So it's a way for them to grow faster than a typical pipeline company because they have so many more opportunities. And another benefit of this kind of switch from the Chilean business to these other ones is the Chilean business is going to grow about 2 to 3% a year. And they see these as growing, I believe it's 5 or 7% a year organically. So can accelerate the growth rate, plus just to get the uplift from a really stable business to businesses that are growing faster. So they see this as accelerating the growth rate going forward.
Yeah, Matt, and let's talk about kind of the advantage. We talked about the diversification that Brookfield gives you. because they're not just in the oil space. How does that kind of insulate them? A lot of these other energy oil plays can get affected by the cyclicality we see in the energy market. Is Brookfield more insulated from that just because they have opportunities? If the oil market's doing really well and the assets are overinflated, they can push assets to those other areas where it's data centers and things like that. For an investor, is that a thing that you kind of think about when you're deciding how you want to allocate or go into these businesses?
Yeah, they're very contrarian. So they'll look at a situation where nobody else wants to invest, and that's when they'll buy. I think it was 2 years ago, Brazil was in some trouble. The oil prices really hit Brazil's pipeline, or their oil company, Petrobras, pretty hard. And on top of that, they had a political scandal. And so nobody wanted to invest in Brazil. And that allowed Brookfield to buy this really good pipeline business for a fantastic price. And so that focusing on looking for opportunities when nobody else is has enabled them to get some really good deals. So right now, the midstream sector is under pressure in North America. Nobody wants to buy midstream assets because with interest rates going up, that's kind of put pressure on stock prices. So these midstream companies are selling them to Brookfield for pretty good values. So that's how they play it, is they look for opportunities when things are down, and that's when they'll pounce.
Yeah, and I pulled some data, I guess, from one of Brookfield's investor presentations earlier this year, and you talk about the markets in a downturn, and Brookfield's balance sheet kind of sets them up to be in a good position to invest there. I think they have less than 5% of their debt is maturing in the next 5 years. 90% of their debt is at a fixed rate. They have no significant maturities in the next 5 years. So, while we're at this kind of bottom or weakness in the MLP market, I mean, they really have the opportunity without significant obligations on their balance sheet to really throw some money into, where those opportunities present themselves.
Yeah, and that's by design. They like to sell assets not when they have to, but when they're at full value. So, for example, Enbridge, they sold their Western Canadian gathering and processing business because they had to. The market put a lot of pressure on them because their debt load has been higher because they're building all these pipelines all over the world, all the U.S. and Canada. So they needed to delever, and that provided Brookfield the opportunity to buy. And so that's one of the things that kind of sets them apart is they'll sell when the values are high, and that hurts them in the short term. Like, their earnings have gone down the past 2 quarters. However, that gave them the cash to buy a bunch of really good assets when prices came down.
Awesome, Matt. So just kind of going away on Brookfield, again, if an investor wants to start a position or wants to start tracking this business to maybe think about starting a position in the future, what should they be following? What should they be paying attention to? What are the important things that they should be tracking with this company?
Yeah, so they have like we mentioned, 6 deals going on right now. So their focus right now is closing those deals, and if they all close, they believe that it'll boost earnings 20% starting second half of next year. So there might be some pressure in the near term. Fourth quarter earnings might be down. They did close some deals recently, but I see there's an opportunity to buy. I just bought not that long ago, and the focus on them is the long term. They're looking 3 to 5 years, and they believe they can grow their distribution by 5 to 9% per year, and it'll be more generated by the organic growth that they can get from these businesses. They have a pipeline joint venture with Kinder Morgan, for example, that they're expanding. They have some other businesses that they're building these little small projects that can increase earnings. So that's going to drive a lot of this growth going forward. And then the acquisitions, if they can get good deals, it's kind of like icing on the cake.